Most people think you need thousands of dollars to start making real money in crypto, and that's exactly why they never start. Here's the truth. With the right strategy, even a small budget can grow into something meaningful. But here's the catch. If you treat crypto like a gamble, your small money will vanish faster than you can say blockchain. In today's video, we're breaking down budget-smart crypto investing, how to use smart budgeting, realistic goals, and disciplined investing to turn small capital into big potential gains. We'll talk about how to start with as little as $10 and still see progress, which coins make sense for small budget investors, how to avoid the traps that wipe out beginners, and how to stick to your plan no matter what the market is doing. This isn't hype. This isn't financial fantasy. This is FundWise, where we cut the noise and give you straight-up, actionable financial wisdom. And now, to take us further into this exciting discussion, please join me in welcoming Andrew, who will take us through the sections of this financial education.
Section 1. Why budget matters in crypto. Before we talk about coins, wallets, or charts, we need to talk about something far more important: your budget. Crypto is exciting. The volatility, the gains you hear about, the millionaire stories. But behind every success you see on social media is usually someone who started with a plan. Without a budget, crypto becomes pure gambling. And in gambling, the house always wins. Here's why budgeting matters in crypto. 1. It protects you from emotional decisions. When you know exactly how much you've allocated, you won't panic sell or FOMO buy just because the market is jumping or crashing. 2. It helps you measure progress. With a set budget, you can track your returns in percentage terms, not just dollars. And that's where you see real growth. 3. It forces you to be realistic. If you're starting with $50, you won't expect to buy a Lamborghini next month. You'll aim for steady growth. FundWise rule: never invest more than you can afford to lose. And in crypto, that's even more critical. If losing that money would affect your rent, food, or basic needs, you're already overinvested. Your budget should come from your opportunity money, funds left after all essentials and emergency savings are handled. For most beginners, that's between 5% to 15% of their monthly disposable income. Example, you earn $2,000 monthly. After rent, bills, and savings, you have $400 left. Allocate maybe $50 to $100 for crypto each month. That might sound small, but remember, in crypto, consistency beats one-time big risks. Section 2. Choosing the right coins for small budgets. Let's get one thing out of the way. Not every coin is worth your money. With over 10,000 cryptocurrencies out there, your job as a small budget investor is not to buy everything. It's to choose wisely. Here's how to narrow it down. 1. On long-term potential coins. If your budget is small, you can't afford to gamble on random meme coins hoping for overnight success. Instead, focus on Bitcoin, BTC, the gold standard of crypto. Slower growth, but highly reliable over time. Ethereum, ETH, strong ecosystem and the backbone of DeFi and NFTs. Select altcoins with utility, like Polygon, Matic, Solana, SOL, or Chainlink, Link, all have real-world use cases. 2. Avoid the trap of too cheap to miss. A coin's low price doesn't mean it's a good deal. Buying 10,000 tokens of a worthless project is still buying zero value. 3. Learn the 70/20/10 rule. 70% of your budget in reliable large-cap coins, BTC, ETH. 20% in promising mid-cap altcoins with real adoption potential. 10% in high-risk, high-reward plays, only if you've done deep research. Example, small budget portfolio, $100 monthly. $700 BTC and ETH, split evenly. $200 Polygon or Solana. $100 a small cap project you truly believe in after research. This balanced approach means your portfolio has stability, growth potential, and a small shot at big wins without putting your whole investment at risk. Section 3. How to buy smart with a small budget. Your budget might be small, but if you buy smart, you can still win big. Here's how. 1. Use dollar cost averaging, DCA. Instead of trying to time the market, Invest the same amount at regular intervals, weekly or monthly. This smooths out volatility and removes emotions from your decision-making. Example, $50 every Monday into Ethereum, no matter the price. Over time, you'll average out the highs and lows. 2. Choose low-fee platforms. If you're investing small amounts, high transaction fees will eat into your gains. Look for exchanges with low trading fees like Binance, KuCoin, or Luno. 3. Avoid FOMO buying. Social media will tempt you to buy just because a coin is going to the moon. Most of those coins crash as fast as they rise. Stick to your plan. 4. Reinvest small gains. Instead of cashing out early on small profits, roll them back into your portfolio. This helps compound growth. Section 4. Risk management for small investors. Even with a small budget, risk management is your lifeline. One bad decision can wipe out months of progress. Key risk management tips. 1. Set a stop loss. Decide the maximum you're willing to lose on any coin and stick to it. Example, sell if the coin drops 20% from your entry point. 2. Diversify within reason. Don't spread $100 across 20 coins. You'll end up with crumbs everywhere and no real gains. 3 to 5 coins is enough. 3. Never chase losses. If you lose money, don't immediately put more and try and win it back. Review your plan first. 4. Stay updated. Crypto news moves fast. A government regulation, exchange hack, or big tech partnership can change the market overnight. Remember, survival supersedes overnight riches. In crypto, the people who survive the longest usually win. Section 5. Common myths that can ruin your budget. Myth 1. The lower the price, the better the deal. Reality. A cheap coin can still be overpriced if it has no utility. Myth 2. You can turn $50 into $50,000 overnight. Reality. Yes, it happens, but it's extremely rare and usually involves insane risk. Myth 3. I'll start big when I have more money. Reality. Learning with a small budget prepares you for managing a big one without blowing it. Myth 4. If I miss the first pump, it's too late. Reality. Many coins have multiple growth cycles. Patience often beats rushing in. Section 6. Action Plan. Your first 90 days. Day 1 to 7. Set your monthly crypto budget. Choose 3 to 5 coins based on research. Open an account on a low-fee exchange. Day 8 to 30. Start DCA. Invest your set amount weekly. Learn basic chart reading and follow news updates. Day 31 to 60. Review your portfolio performance. Adjust allocations if needed, but avoid overtrading. Day 61 to 90. Continue consistent investing. Reinvest profits. Begin exploring passive income options like staking. By the end of 90 days, you'll have a growing portfolio, a system in place, and the discipline most beginner investors lack.
Turning small money into big gains isn't about luck. It's about discipline, strategy, and patience. Start with what you have, stick to your plan, and let the magic of consistency work for you. If you found this helpful, hit that like button, subscribe, and share this with a friend who's been thinking about investing in crypto for months, but hasn't started yet. Remember, the best time to start was yesterday. The next best time is right now. This is FundWise, where we make your money smarter.